All right. Hey, thanks for joining the Financial Pathway podcast. Today we're talking Elon Musk and Twitter. We're talking recession, inflation, and why the last 10 years of American life have been uniquely stupid. So this is going to be a roundup of some of the articles, stories that I've found most interesting over the month. I always send them out to everybody at the end of the month in the Money Minute update. So if you're not already signed up for those emails, please go to my website or to the Facebook page and you can get signed up there and get these in your inbox each month. Last month I decided, you know what? Why don't I also talk through some of these big news stories? So that way, whether you're seeing them on the email or you listen to the podcast or you follow the Facebook page, that way you're aware of some of the things that are going on in the world of finance and just affecting our lives generally. So the few things I wanted to talk about, first and foremost, I did want to talk about Elon Musk and Twitter. This is something that's personally something I find very interesting, and you've probably seen the news by now. It's been an interesting saga, so I want to lay out the story just quickly. Going back years, Elon Musk has been very critical of Twitter's policies in the past, and he's been very critical on Twitter, of all places, so you can look back and see tweets that he sent out back in 2017, 18, etc., where he openly questions the censorship policies and how Twitter goes about allowing certain content and putting warnings on others and all of that. It's not easy. I mean, the devil certainly is in the details as far as how to run a social media company. And I think if you're sitting in the seat of a Jack Dorsey or Mark Zuckerberg, it may be a lot harder than you think it is from the outside looking in, because as much as we do want free speech, obviously not everything that would be protected free speech in America do you want on a social media platform, because there's a lot of things that would be very problematic. But where do you draw the line, and how much does your politics inform your viewpoint on all of this? So Elon Musk has been very vocal in saying that he wants Twitter to be really a forum for free speech across the globe. And I know he has a lot of ideas on how to change the medium. So basically what happened was a few weeks ago, the news was reported that he had bought about a 9% stake in Twitter, which was very interesting. It's definitely not a majority stake, but it would make him a very large shareholder. In fact, the largest single shareholder in Twitter. And so people kind of openly question, what's his end game here? What's he trying to do? Is he trying to get a seat on the board, trying to influence from within? And that did kind of seem like that was the way it was headed until it wasn't. And then all of a sudden the news broke that he had made an offer for Twitter, that he had offered to buy the company outright, which Elon Musk is the world's richest man. His net worth has fluctuated in the neighborhood of $250 billion here recently, and goes up and down, of course, with Tesla stock and SpaceX and all of that. The offer price was $54.20 a share, which was well above where Twitter was trading at the time, which is typical when somebody comes in and wants to buy a company outright. They typically have to offer a premium price and well above the current market. But the total bill for buying all the shares of Twitter outright comes to about $43 billion, which very few people in the world can swing, but Elon Musk is one of those people. And so the funding has been lined up. Everything is put in place. Initially, though, Twitter was very reluctant to even want to consider. The CEO of Twitter made it pretty clear that they weren't leaning towards wanting to accept Elon Musk's offer. In fact, they instituted what they call a poison pill. So we've seen this before. Netflix was an example of it some time ago, and other companies along the way, where if they feel like an outside party is going to try to utilize a hostile takeover, try to come in from the outside and buy up a majority stake in the company and kick them out and take control, they'll institute what they call a poison pill, which basically entitles the board, entitles the key leaders to buy more stock of the company at really discounted prices if a certain criteria is met. In this case, it was if anybody, Elon Musk or anybody else, buys 15% or more control, 15% or more of the total value of Twitter stock, then this poison pill would go into place. Basically, it would allow these key leaders to buy up a huge amount of stock at a very low price, dilute the shares, and make it financially suicidal for somebody to try to take over the company. It would just make no financial sense. And so initially that was their first thought is, oh, okay, I see what you're trying to do, so why don't you try this on for size, and kind of putting a moat around Twitter to say, no, it's out of reach for you. But then apparently there was some reconsideration because while the board of directors at Twitter may not like the idea of Elon Musk taking it over, they are also fiduciaries, which means they're obligated to act in the best interest of the shareholders. So when you think of it that way, what is in the best interest of shareholders? If somebody's coming along and saying, we're offering to pay well above market price for your shares, you have to at least entertain that possibility. And ultimately, they reconsidered and accepted Elon Musk's offer. And so it's a go as of now. It is not official. There are I's to be dotted and T's to be crossed. There are details that are being hashed out, I'm sure, over the next few days and weeks to make this official, but everything is headed that direction. So what is Twitter going to look like going forward? It's hard to say. Different policies about the algorithm is probably one of the biggest differences. Everybody's talking about, well, there's going to be an edit button. I mean, that may or may not happen. But substantively, I think the algorithms and how people are incentivized to see what, and I think a lot of that may be retooled. Just even things with personal verification. Elon Musk has talked about the importance of trying to verify human users, that if you have a Twitter account, that you can be verified that you are a real person and not a bot, not spam, not some creation of Russia or China or anybody else that's just out there commenting, posting, and stirring up controversy where there really is none. And even things like DMs and sending private messages and encrypting those, so giving a greater security to those who are users on the platform. A lot of exciting possibilities, and hard to know what that will look like. And it's also interesting to see the political response, because I feel like a lot of people on the right side of the aisle feel like here comes Elon Musk and he's going to be the savior of free speech, and this is going to be finally an unbiased medium of communication in Twitter. And a lot of people on the left think that this is very bad for free speech, and that this is problematic to have a billionaire who has this level of control over a medium that's one of the only mediums for public discourse that's worldwide. So all of that is very interesting, and I'm sure we're going to see a whole lot more about that in the coming days. But that's the big news of the month. A couple other things that I did find interesting is that there is probably the most reliable indicator of a coming recession happened this month. And not a whole lot of people talked about it. I understand, because it's a little bit more of a technical thing and not a lot of people are even familiar with what it is. It's when the bond curve, the yield curve, inverts. So the U.S. government issues bonds at different lengths, from 3 months all the way up to 30 years. Typically what you see is the shorter the bond, the less interest it pays. The longer the bond, the higher interest. That's a normal yield curve. The longer your bond is, the more interest you get because of the time. The length of holding it usually leans towards there being a premium on that. However, when things start to change and the economic outlook is starting to sour, what we've seen in the past is that the yield curve will invert. Namely, the 2-year bond will pay higher interest than the 10 years. So instead of it gradually going up, it's actually going down the longer the time frame. That has been a reliable predictor of most recessions over the last 100 years. Not every recession, but as far as indicators go, it's probably the one that most economists and investors would say, yeah, that's probably the best one that we know of. So it inverted this last month. So what are we going to do with that information? What is there? And by the way, when I say a recession is coming, that within the next 2 years is typically the time frame that we see a recession hitting. Nick, I think it's Majuli. I'm going to say Majuli. He writes the blog of Dollars and Data. It's become, I think, my favorite blog. Like, every post of his is just gold. It's really good. He has a great article on what to do now that the yield curve is inverted. It's a shorter read, and I think that'll be very interesting for you. In other news, inflation continues to go up. Sorry, I wish I had better news, but back in March, year to year, from March last year to this year, prices are up 8.5%. So it just continues to tick higher and higher. Federal Reserve is still planning to raise interest rates. They're hoping that's going to cool down runaway prices, and that continues to be front and center in our day-to-day lives, just how prices are rising. And then probably the best article that I read this month comes from Jonathan Haidt. I think that's how you say his last name, Haidt. He It's a longer article. It's well worth your time. Why the past 10 years have been uniquely stupid. He writes about how, he uses the Tower of Babel as a metaphor about how social media and the way social media has developed and been incentivized has really fragmented our society. And our ability to communicate, our ability to understand, to discuss nuance and detail, to want to paint the other side as, the worst people imaginable, how all of this division and fragmentation we see in our society, a lot of it is the result of social media and how that's affected our day-to-day lives. Very thoughtful, very well written, well worth your time, and you can find that on the email, that article from Jonathan Haidt. A couple other things, just in the way of visuals that's on that email. There's an interesting chart showing how Netflix has really dropped. The stock dropped this month over 30% in one day because they were expecting about 2.5 million new subscribers in quarter one, and they got, drumroll, minus 200,000 subscribers. They lost subscribers, which was not what they were expecting at all, and it really doesn't bode well for Netflix. And so they're kind of scrambling, wondering where to go from here. They've thrown out some different ideas, like even offering an ad-based offering to Netflix, which back in the day they laughed at. They would actively make fun of streaming services that had ad-based options because they're like, that's not what people want. And I don't think it is what they want. But when you're desperate, I think Netflix is looking for any and all options to regain their revenue that they are losing. So that'll be interesting to see how that plays out.